Traders, this is Blake Morrow, and you are listening to the daily Roundup webinar. I hope everybody's having a great trading session.
I'll tell you who's not having a great session. The euro.
So the euro is sitting at the really key level of support. You can see it is marked as our bull bear line on ForexAnalytix. You have to realize the bull bear lines, we don't change those that often. It's very rare that we do. So when we're here, you can see it right here. We're here. That means we're, obviously a pretty important support. And you can see that, our support level for the euro was tripped. It sends out alerts and texts and applications. You get push notifications, all that jazz. Anyway, you look at the euro dollar though. We're really attacking those lows that were in, that were formed back in September. Now, Amanda in our chat room, she made a great point. She's like, people are so used to the euro dollar ranges that this could get really ugly if it really starts to break, which, man, it is ugly. That's for sure. I mean, despite the divergent relative strength that you see on a 4-hour chart, daily RSI also is, very oversold. If you guys haven't seen like the daily, the DSI, I believe, let me double check that really quick and I'll actually pull it up for you. Just give me 1 second. I'll find it. The DSI from overnight was at 13. So 13 is a pretty extreme reading, meaning that, we're at levels that typically speaking, anything below 10, you have to start getting really careful because that's showing an extreme sentiment, bearish sentiment. If it's above 90, it's a very bullish sentiment and it gets extreme. But when you're below 10, and we were at 13 last night, I'm assuming today is going to be, probably around 10, maybe 11. That means that shorts should be a little careful here. We've completed we had the head and shoulder pattern. We've broke the 161% extension of this move. And like I said, relative strength looks oversold, but as you guys know, you can always get more oversold. So that's one thing that, I'd like to point out. I mean, you can look at relative strength from way back here. It's going to be right around there. So we're talking about May of 2018. There's a long way to go before relative strength becomes too oversold. So for those of you that are trying to buy it down here, just be careful. The thing I'm really hoping the euro bounces, and that's not because I have euro longs, just so you guys know. I'm not in the euro long camp. I'm in the Aussie dollar long camp, and I do have some Aussie longs. And so therefore, with the euro dollar continuing to fall, I get a little nervous when I'm playing the long side of the Aussie, even though I've been long since yesterday. I'm getting a little nervous because if the euro goes in a full-fledged, tits up mode, if you will, excuse my language, but if it goes, completely tits up, then the next thing you know, the Aussie that's rallying here, that will probably turn, and we'll start seeing some reversals there. So I'd really like to see the euro bounce in all actuality. The one positive that I have for the Aussie at the moment is the S&P continues to rally. If you guys haven't noticed, the S&P continues to grind it out. We're at new all-time highs again today. As I was saying and alluding to on Twitter, I'm really looking for some sort of acceleration phase higher in the S&P. Something that looks like, instead of just, this slow grind higher, I'd really like to see us start to accelerate higher. Because I'd like to see the equity markets give us some sort of blow off top. Whenever we get a blow off top or a capitulation, if it's a sell-off, it usually marks the highs or lows, and then you start getting two-way price action again. We haven't had two-way price action really in the markets in so long, I kind of forget what it's like to have it. And that's something I yearn for, and as a trader, you should as well. I'm just hoping it comes soon. sooner rather than later. I'm sick of the very low volatility in the FX market, the low volatility in the equity markets. You know, you and I as traders, we make our money when the markets are moving up and down, not just up or not just down. It makes our jobs a little bit more difficult, actually a lot more difficult, and most of you know that. All right, so you know, like I said, as long as the equity markets continue to go higher, I'm not really too worried about the Aussie. I am a little worried about the sell-off in the euro. That's starting to, you know, concern me a little more. Let's talk a little bit about the dollar yen, because the dollar yen, you know, I made some reference to this on Twitter a little while ago. You have gold going up and you have the dollar yen going up. Frankly, I think that the dollar yen is going to continue to go up. Now, you might ask me, well, Blake, if you think the dollar yen is going to go higher, why don't you short gold? I could. I'm just not bearish gold. I think gold's been holding up relatively well. That doesn't mean it can't turn lower today. Let me pull up gold really quick. Where is it? It should be right here. Okay. I think gold's in this triangle, so you know, gold would have to get below really 1550 in order for me to be bearish. But at the same time, I'm not bullish yet. I haven't seen it break out. I have to note that to you guys that gold is holding up very, very well in light of equity markets rallying, in light of you know, in light of the dollar yen where it's at right now. So you have to be mindful of it. Doesn't mean you have to, you know, be a buyer. Doesn't mean you have to be a seller. You just have to understand that it should be, theoretically, gold should be going down. It's just not. And the longer it doesn't go down, the more likely it is to start squeezing some shorts. And that's something that, you know, obviously if you're trading gold, you got to be keenly aware of. Let's talk a little bit about the dollar Canadian. So the dollar Canadian's had this multiple failure up at the 133 level. Now, you guys know I am a dollar Canadian bull. As I told you this morning and over the last couple of days, I'm not really bullish up here, but overall I'm bullish because of the false breakdown on a weekly basis. That should lead to a breakout. I just don't think right now is the time. Obviously, with equities going higher, volatility is falling. The dollar yen should be buckling under that pressure, and it is. Today it started moving lower. The 200-day moving average is the 161% extension of this last leg higher. Also, the previous trend line comes in at the 38% retracement that comes in around 131.80. Ultimately, I think that's where we're going in the dollar Canadian. I'm like I told those of you that were on the FACE webinar earlier this morning, I didn't want to short the dollar Canadian, even though I thought it was going lower because I own the Aussie. But at the same time, I did feel it was going lower. And as I explained earlier this morning, I'd rather be a buyer on this 38% retracement. You know, oops, not that one. Right here. This 38% retracement back on this trend line, I'd play that trend line again because that's, you know, good risk reward for longs down there, in my opinion. Well, it's, you know, manageable risk, and that's all I can really ask for as a trader, is looking for, you know, manageable risk. Where can I get in and you know, keep my stops fairly tight? And that's what I was alluding to earlier today. Brock said, Blake, your mic is weak. All right. Well, let me ask you this. Does this sound a little bit better? Just really quick. I know I'm almost finished. Just want to make sure this sounds better. Does this sound better? Because I might have messed with my settings. It's good. Okay. All right. Thanks, guys. Yeah, you know, I'm sorry. I'm going to be wrapping up here in a moment. I'll make sure I make that adjustment before tomorrow's daily roundup. Let's see. Anything else I really wanted to cover today? Still bullish the Aussie. Nothing really. Actually, that's it. I mean, it's been a pretty slow moving market minus the euro. Just be careful. I mean, if you're short, you got to understand we're at some pretty key support. Does that mean you should be long? I wouldn't even attempt to try to play a squeeze until we get back above like the daily high. Like we gotta actually turn. When I saw the euro yesterday, and at the end of the day, and I saw this hammer here. Let's minus today's candle, but I'm talking like right there. I saw the hammer. I'm like, all right, I'm on, you know, alert now because I'm going to start looking for a euro bounce if we can find one. But after today's price action, no. If we take out like yesterday's high and today's high, which comes in at 109.25 basically, roughly, you know, we take out those highs, then you can start thinking about playing the euro as a squeeze, because then you have very manageable risk, right? You buy it at 109.25, you put your stops below whatever the lows become, and then you get long and, you know, look for a squeeze back towards 110. But we're not seeing any type of bullish price action as of yet, and unless something changes soon, I don't think we're going to. So just be careful. Be careful with shorts, and with longs, you got to be probably equally as careful as well. Or actually, let me take that back. Be careful with shorts, but with longs, you got to be more careful, because we haven't seen any sign that this is over. But if we only get a limited move from here below, you know, this 109 or 108.80, excuse me, if it's just this limited couple pip move, we might end up getting a squeeze back towards 109, but really we have to get back above 109, you know, 25 for me to actually turn. All right, guys. Hey, listen, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, and download the app when you do that, and then jump in the chat room. You can chat with me there, because that's where I'm at all day. You guys have a great afternoon, and in Asian trade, be a little careful of this dollar strength. I'll talk to you soon. All right, thanks.